I'm Peter Steenkamp, CEO of Harmony Gold, a South African mining company. Also have assets in Papua New Guinea, and of late also a project in Australia, in Queensland. Yeah, we had a mining conference in Colorado Springs. The conference, we actually here just made to update our shareholders about the latest development in Harmony. Quite a number of things are happening in Harmony. We obviously acquired the Eva project in Queensland. During the course of the years, we had a good set of results during the course of the year. Getting really good momentum on many of our operations, and also updating them on the Wafi-Golpu project. Quite a lot of excitement for us as a company in terms of growth, and also to maybe just tell the South African story a bit here at the conference.
Okay, man. Lovely to meet you. I think I met your CFO, or spoke to her at least. I got a good account of what you were getting up to. Right. You said you're over here, so obviously trying to update shareholders and maybe new money. Is there new money here?
I'm not so sure if it's new money, but we do see a lot of interest from more generalists now into the stock. We also had a roadshow to London prior to us coming here, post-results roadshow, and actually had quite a number of people that we never saw before that came to listen to our story. Yeah,
well, it's a tough space for at the moment for precious metals, isn't it? I mean, 3 years equities have been struggling more broadly, precious metals struggling more broadly, and yourself in terms of the older assets. I think Boipelo describing this old Harmony in terms of trying to milk the last vestiges of gold from there before you start with the newer projects. So how are things going in country in South Africa?
Yeah, the actual fact for us has actually been very good. In all the gold mines, South Africa has done well.
Right.
The reason for that is that we got the two things that you have to look at. First of all, the dollar price of gold, but then secondly, also the exchange rate.
Yeah.
And because the dollar is so strong, the exchange rate actually worked in our favor. So our all-in sustaining costs, year on year went down. And so we're probably one of the very few companies that had an improvement in all-in sustaining costs in dollar terms.
Yeah, no, and I saw that because it was creeping up quite high. So in terms of, some of the operational activities, what have you been able to do to kind of improve those margins over and above the exchange rate?
Well, I think the first thing is we've got very predictable and also reliable production, and it's on the back of a really a good maintenance on all our infrastructure. And secondly, the flexibility that we create in the organization. So we are able to mine better grades, and we've got that sustainable, and for that reason we've done well, and we've been keeping a very predictable and also of getting our guidance every year. So it's a good story on the production side. And then the second thing is obviously our cost. And even in rand terms, our cost only went up 6% year on year. So we are very strict on our cost. We have obviously quite a lot of challenge with electricity, of energy supply to our mines.
Eskom, our dear friends.
Yeah. And but I mean, we are very lucky that we have what we call load curtailment. So we are asked to cut electricity, and then we can decide where we want to do it. So this far, we haven't had any production interruptions due to that, and we managed to, through a lot of resilience and a lot of plans that we make, kept going all the time. Yeah.
Right, okay. Now, obviously, there's a lot of pressure on you guys to sort of maintain or justify the value that the market is giving you at the moment. Margin's going to be a big part of that going forward. We've just touched on some of those things. But you've made some acquisitions. Let's talk about Papua New Guinea and Queensland. Which you want to talk about first?
Oh, well, it's your choice.
I'm going to start with Queensland, because obviously in terms of jurisdictional risk, that's, I guess, it must be quite appealing to most investors.
Yeah, I think so. And obviously for us, we've been operating in Australia and then from Australia for 20 years. So we are familiar with the country, familiar with the conditions.
Yeah.
Many of the colleagues that work with us is actually from Australia. So we don't believe that's a big risk there, but obviously starting a brand new mine is always risky, but it's a fairly vanilla type of operation, low strip ratios.
Right.
And then obviously, it's a vanilla plant, concentrated plant, and with infrastructure right on the doorstep. So it's actually, compared to where we build mines in Papua New Guinea or some of the other places, this is actually should be easier.
And get to that. Well, it should be easier, but in terms of also, I guess, commodity risk for you as well, that's important to manage.
Yeah. No, I think we, in any case, with our Wafi-Golpu project, will be in a position where we have to be a copper player. So So we just know probably going to be a little bit earlier into this copper space. So yeah, we think copper and gold kind of go together, and obviously we're quite bullish about the copper prospect for copper prices in the long term. So it's a natural fit. So it's not as if we actually went out and trying to find a non-gold asset. We are very keen on having more gold assets in our portfolio too.
No, I get that, and obviously gold price obviously helping, exchange rate helping, etc. But you've got to build up kind of war chest for all of it. Well, one for the new assets. Two is the kind of defense for what more is to come, what the market's going to throw you. Is mining is difficult, etc. So where are we sitting with cash at the moment?
Now we're very good. Our net net debt to EBITDA is 0.2 times. That's after we've done the acquisition of Eva. So we are paying that back quite quickly. And at the moment, there's a very good cash flows from South African operations and from Hidden Valley and Papua New Guinea.
Yeah.
So we've got actually a good tailwind behind us at the moment. So we'll be gathering cash, and obviously we do pay dividends too.
Right. Okay. And how much dividend?
We pay 20% of net free cash flow.
Okay. Okay. And what's that looking like for last year? This year?
In the last year, when we did Eva, we did the interim, we missed the dividend.
Yeah.
But we reinstalled it now at the year end.
And do you feel obliged to pay though? Or do you think probably rather like get these projects up and running, get the cash flow going quicker? We'll hold off on dividends. What's the feedback for you?
Well, I think there's no use having a policy you don't stick to it. So I think we had a long debate about that, and internally the board and also the executive directors, and eventually decided that we stick to when we can we should do it. When we obviously have a big project and there's a very strong rationale to do it, we potentially will not do it. But in general, I think we will keep on paying the dividend.
Right. Okay.
And we have to put these projects a little bit more on a long-term financing, thing, not paid only out of cash flows.
But and the other thing, I was speaking to Mark Bristow about 3 weeks ago, and he said culture is very, very important, obviously, and it's taken about 4 years to kind of integrate their two businesses together. Now you've just kind of got two other assets, two different jurisdictions. How are you doing that process? Is that important to you?
Yeah, of late we've done the two mines that we brought in from AngloGold Ashanti. We integrated them in harmony. That was very, very good. It went very well. I think the fact that we kind of immediately started looking at extending the life of mine, investing in the projects, that immediately gave people a lot of comfort. We have many of the people that's now been at this a while, as adopted more senior positions in the company. Mm. So integrating, them, the AngloGold Ashanti people into the harmony culture was not a big deal. We just had a leadership conference, and we had so many good feedback from those people in terms of, adapting to the culture and how we embrace them and bring them in. I'm a very firm believer that leadership are actually the key.
Yeah.
And you have to spend time and effort with them to make them change their way. And Harmony is a kind of a family business, so we are very approachable. We are not all over the world. We're kind of in the same jurisdictions.
Yeah.
So we kind of get people around and get to people and a typical open door policy. Anybody can walk into your office anytime.
Right.
That type of
Are you spending much time, or how much time have you spent in Queensland? How much time have you spent in PNG?
I go there probably about 3 times a year.
Okay.
PNG and Queensland normally do one trip. So 3 times a year.
Right.
And then obviously spend time on the mines, have town hall meetings with everybody on the mines, etc. Yeah.
Right. Okay. You're an ops guy, right? That's the bit you enjoy.
Yeah, that's the bit.
Not talking to people like me. I'm sure, or conferences. So in terms of what we've got to look forward to, clearly it's come from you've made some big decisions, some aggressive decisions because of the decline in production and margin, right? So that's really good news. But you've got to say to the market, there's got to be a narrative from you as an organisation and say, right, think of us in the following way. We are going to survive. Why? We are going to win. Why? You're buying into what type of company now? It changed.
Yeah, we changed dramatically. I mean, the acquisitions that we've done, the 3 acquisitions, we actually did the 50% of Papua New Guinea, Hidden Valley mine in Papua New Guinea, plus the 2 AngloGold Ashanti assets and the tailings retreatment facility. So, I mean, that's a much better quality than we had before. So, of Harmony of old has been very, in the wrong part of the cost curve, really low margins, low grade, deep level mine operations. And we've changed that all along. I mean, and if you look at where the cash flows now come from. It actually comes from all these new assets that we brought into the business. And we can extend them for quite a number of years. All of them will actually have close to 30-year lives.
Oh, really?
So,
okay.
In the end of the day, it is if we had done that, we would have been in real trouble today.
Yeah.
But now, because of that cash flow, so what we have now, what we call the optimized assets, which is a kind of old Harmony, is that we mine them for maximum NPV. So some of them has got longer lives and some shorter lives. But really trying to make sure that we get the maximum out of those ore bodies, but not necessarily put other project capital into that area, because it is lower grade, and some of those mines will still run for 20 years.
Right.
But some of them will obviously within 10 years or so close down.
Right. So obviously managing cash flow is very, very important. So if you owe the bank a lot of money, you're in control. So there's a little bit of that about it. But your shareholders, current shareholders, what are they asking you to do? Is it just carry on as is, or do they need a little bit more aggression from you?
I think we get a lot of credit for our ability. Well, first of all, how we improve the quality of the assets.
Yeah.
So they are very happy with what we've done, and some of them are very loyal and have been with us for many years.
Yeah.
The second thing is, I think they're very excited about the projects that we have in front of us.
Yeah.
And then of course they are very happy in the way in which we actually manage our costs. But yes, obviously we have big projects ahead of us, and getting to the right project finance for those projects is going to be a key in terms of how the share will react in the future.
Do you feel that you're back in control of the balance sheet now?
Absolutely.
Okay.
We actually been for quite a number of years been very conservative and very good shape. When we bought the assets during COVID at the time, we actually went to the market for the financing from the market, and had very, very good support from the market. So yes, it was we are in a good shape and feel that we can actually have a good footing to start the new projects.
And you've got the time to do that. You're not under any pressure.
No, we don't. And I think that the first big project will probably be Eva.
Yeah.
And we think with the current cash flows and some project finance, it should not be that difficult to finance. And then of course Wafi-Golpu is a big ticket, and that will have a very specific funding plan for that.
Right. Okay. Well, as they say in banking, make it rain. And it is. So keep doing what you're doing. We'll see you soon, okay?
Thank you.
Cheers.
Thank you, Matthew.
Okay, bye.
Bye.